there. Okay, just follow me through with this process. Now, when traders say bear trap, what does it mean for a market, or for what does it really mean for a trader when it says bear trap? It's just the opposite of making bull trap. What is exactly a bull trap? It is a technique used by the market makers. The derivative traders teach you how to become a market maker. There's what called a market maker and a market taker. So I'll show you all that later on. So a technique is a bull trap and a bear trap. So a bull trap, first of all, is a technique used by market makers to buy a huge amount, suddenly spiking the price. Okay, this makes everyone else that is a breakout, and everyone buys, and the market maker then sells enormous amount, pushing the price down. Turn liquidation, everyone gets blah 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 blah. All this means is that, you know, bull trap. When you say this is a bull trap, meaning that the price seems like it's going up, but the the market maker buys a huge amount of the asset to suddenly, you know what's it called, spike the price of that asset. I mean, when the price of an asset, let's say, is going down, let's say we see a red candle going down, and you see, then we discover that someone has just bought a huge amount of uh, asset. Then suddenly you see the price going up. It's going up. Immediately they just sell there because they bought at a very low price. They use huge amount of cash to get that asset when it was sold down. So their own amount of money they use in buying that asset was big enough to spike the asset price to a higher level, or bull level, that is higher than what was the bearish trend that was going on. So they are, when they sell at where they want to sell, because of the skyrocketing of the price, the market just go down immediately. That is what is called a bull trap. Okay, and sometimes traders that goes short on that position, they get liquidated, and they get stopped and lose some amount of money. Is is equivalent to bear trap. When the price is going up, and a certain amount of traders come into the market to make the market, and they sell off. So when they sell off, they know that the market, because they have huge amount of cash, let's say $1 billion, $1 trillion in the market. So when they sell off, they know the market will be coming down. Okay, they know the market will be coming down, and they go short immediately. That is what we call a bear trap. Now, when they make some profit there, they buy again at a lower price. Okay, and when they buy immediately, the price starts skyrocketing. Okay, it's just what it really means for the bull trap and the bear trap. Okay, I'm taking my time to explain all this, not because I just want you to understand, so that when we start discussing about all these things, You don't have a reason not to understand what we're talking about. It's just for me. I just want you to understand, Okay, there's all kinds of consolidation in crypto trading. Okay, and the correction. Correction is when a price goes down and it corrects itself, and we'll be talking about all this. A correction is a fall in price after making a new peak and an upward rally. Okay, uh, now consolidation is a period where the price is ranging in a well-defined region. This is a period of indecision and generally leads to a volatile movement in either direction. Now, a consolidation is like a sideways movement, okay? A sideways movement, okay? Uh, Now, the wheel I was talking to you about, now, the wheel. Told you about whales that they are the ones that you know mostly trade at arbitrage most times. Okay, come into the market with huge amount of cash. So a huge player whale is like a crypto traders they use this whale all of the time, most of the time rather. So I want you to be familiar with it. It's a huge player who has a substantial amount of capital. Whales whales are said to have they have substantial amount of capital. Like I said, I think I've explained this well. I don't need to talk about it much. Pump and dump is like pump and dump scheme is like the record cycle of an altcoin getting a spike in price followed by a huge crash. Now, someone like we said about the bear trap and bull trap, someone comes into the market, it buys when it's really low, buys higher than the total supply of the asset, and they allow the asset to go up and it takes the profit and it sell off immediately. And you know, when it sells off, the market dumps immediately. So these are the pump and dumps trader. Okay, such movements are often attributed to low volume, hence the pump. Traders who pump and buy huge volume may wish to invoke FOMO from the informed investors or traders. So this is basically what it really means to pump and dump. When you see some coins just go up, just as what I was saying about BTC, it just went up from 45 or 46K to 50K. Immediately it dumps back within some days or like a day. It went up to like $52,000. Then immediately it went down again to $45,000. Then you see that the pump and dump scheme or the pump and dump, that is what it really means. It pumped higher and it didn't take some time, it dumped. So that is what it really means. When traders say pump and dump scheme, get that in your mind, okay? So what exactly is sideways market? I talked about sideways market when I was talking about the a consolidation market. Uh, Sideways market, when traders say sideways market, I'll be using it more. It's an indecisive market that isn't leading to a breakdown or a breakout and not giving any signal to trade anything, either short or long. The thing is just going sideways. It doesn't even go up or down. It just go this sideways, just like that. So what exactly does traders mean when they say sell off? Just sell off, sell off, sell off. So profit taking after a rally in price. Now when the prices go up, they just want to sell. Whether it which leads to lowering of the price of the asset. Okay, rally. What does it mean when the traders say rally? Okay, this is rally in price. It's an upward trend leading to increase in price of the asset. Can happen in both bear and bull tr- market, rather. So, what exactly it means? Rally means is when the price is going up. You know, uh, in a bear market, it rallies down. Okay, so it's either both ways, can be used both ways. Okay, I want you to basically be familiar with all these things. I'm spending so much time to do it because I want you to know these are things to be using. I'll be using each and every most of the words here so that you'll be familiar with cryptocurrency terms. Okay. Now, what exactly is liquidation? We'll be talking about you being liquidated when a trade goes against you. Now, when you are stopped out of your position, let's say you say you speculated that the price will be going up. Now the price is coming down against you. Now that is and maybe you use a stop loss. The price now is going more than your stop loss. You'll be or you never use a stop loss. That is perfect example. You don't use a stop loss when you are liquidated. So being liquidated is when you don't use a stop loss and the price goes against what you have speculated, you get liquidated of all your cash. And when you're using the isolated margin, by the way, margin. Now, what exactly is shitcoin? When I hope this is understandable though. What does it mean when traders say, this is a shitcoin, this is a shitcoin, don't go into it. Now, a shitcoin is a cryptocurrency of little to no value. Usually a late comer to the Bitcoin, an altcoin basically. A shitcoin is like a cryptocurrency that doesn't have value, but that is not popular to the whole world or to traders themselves. Okay, there are a lot of there are a lot of uh, uh, market out there. Uh, there are a lot of currency, crypto out there that are shit coins. Okay, I'll show you some in a bit. So, what exactly does a trader mean? We're going to be looking at this when we start our trading. OHLC. Okay, we're going to be looking at it. What does it mean? OHLC. What does it mean? What does it mean? What exactly does OHLC means? Open, high, low, and close in the candlesticks. So what does ROE mean? Return on equity. It is calculated by actual capital employed in the trade, not through leverage. So I think return on equity is being calculated when we're doing the margin. I think we'll be doing this later on. Just go back to what we discussed some time ago. Okay, is being calculated using the actual capital you used on that trade and not the leverage. Okay, so return on equity will be calculating it as we go or as we are going through this course. Okay, I just wanted to know these terminologies. What exactly is pattern in crypto? A pattern is a chart. Is a chart. Is a chart pattern that is predetermined. Is a predefined chart pattern that has been going this way for a long time in the crypto history uh, of trading. Okay, so traders have discovered that when this pattern go this way, it will yield a certain result. So this is what we call pattern in crypto trading. There's what we call the head and shoulders and bullish some bullish ascending and descending triangle, and lots of patterns out there in the market. So we'll be diving through all those patterns and all that. So and how to get a clear understanding or determine which way they are going in order not to make a mistake and lose a trade. So I just want you to know this. Accumulation is like process of accumulating so many coins and building wealth, like we talked about in our first introduction there, in our beginning of this introduction rather. Now, what exactly is fractal? Now, fractal is a pattern of price movement which has occurred earlier and might occur again. You need to know when traders say what is fractal. Okay. Now, what exactly is limit order? Limit order will execute itself. Is a predefined price that will execute itself when it reaches. Okay. What is all-time high? All-time high is what ATH is all-time high. Traders use this a lot. They said this is the highest that this coin has gotten to, this price is the highest Bitcoin has gotten to in a certain month, in a certain year, in a certain week. So that is what's called all-time high. Time period and time frame is what we look into, or our candlestick in our chart. I'll be showing you in a GIF, a GIF, in a jiffy. We'll be discussing about it and discuss. So now, what exactly is market order? Market order is the price in which the exchange gives you for a certain type of uh, you buying a certain coin or selling it. So now average, what is average town? Average town is something, average down average down rather is trying to lower the average entry cost of a position by slowly buying the asset at a reducing rate. Now, what is volatility? Volatility is like, we discussed volatility the last time. Discussed volatility and liquidity. So I think we discussed the return on equity, the open altcoin. Altcoin is like every coin, every other coin aside Bitcoin. Okay, we call them altcoins. Okay, now the crypto terminology bull market. We discuss about bull market is when the market is going up is a bull market. When the market is going down is a bear market. What is food? Food is uncertainty, fear, and doubt in the mind of traders, in the mind of traders, in the mind of investors. They are scared to enter a certain trade because they are uncertain. They don't know if the trade will go against them because of some certain news they hear and all that. So that is what we call food. When traders use all these words I'm talking about now, so you need to go back and make sure this all sinks into your head. We'll be using these words while we are trading, while we are teaching this course. Okay, now what exactly is market cap? What is market cap? Market cap is essential as a trader, as an investor. So the market cap the market cap capitalization is still the same thing of an asset is calculated by the current supply of the current of the underlying asset multiplied by the certificate management protocol of that coin. Okay, now the market cap of a certain asset, I'll show you market cap of assets and how, and this is how they are calculated first of all. Now the certificate management protocol is the thing that enables everybody to determine what exactly is the market cap of every coin, asset, stock, and all that. Okay, and this certificate management protocol is an internet protocol that is standardized by the IEF, IETF rather, IETF used for obtaining S.50 digital uh, certificate in a public infrastructure. Okay, this is a great thing to understand first of all, because many people don't tell you this. Okay, I just want to tell you because you really need to know. Now this is an uptrend. Okay, this is an uptrend. When they say the market is an uptrend, when traders say this, meaning the market is going high. Okay, the market is going high. Now this is a downtrend when the market is going low, opposite of downtrend. When the market is going low, when the market is going low, when the market is going low is a downtrend. Okay, I hope that is clear. Uh, we're done for today. So we'll be focusing now getting into what we have really focusing on technical analysis in the next video. Okay, join me as we go